and I'm here with another Dividend Talk video. All right. Just as a reminder, I am not a financial advisor. So this is just what I do and my thoughts that I'm sharing. All right. Do your due diligence before you invest in anything. Also, I do not invest for others. So if anybody is reaching out, impersonating me, block them. All right. So today, in the last month or so, I have been looking at stocks, specifically dividend stocks that I could add to my growing portfolio. All right. So currently, as far as the dividend income is concerned, I am looking at a annual income of $11,449.08. All right, so looking at my portfolio, one of the things that I thought about is I wanted to diversify it a little bit more. And one of the stocks that I have been keeping an eye on the last year and a half, 2 years, is J.M. Smucker Company. All right, this is a leading American manufacturer of food, beverage, and pet products. Currently, I've had food companies. I mean, right now, the only beverage company I have is Pepsi, which is a strong dividend aristocrat stock. But I'm thinking about also adding more to that sector of my portfolio. All right. So, it talks about some of the major brands, coffee, Folgers Cafe. They also license at home with Dunkin'. And, with the cost of living, people probably won't stop drinking coffee, but they'll probably start to, pivot more to making their coffee at home, which can actually increase J.M. Smucker's revenue from that segment as well. So that's something I also looked at and I thought could be very, very interesting. But then I looked at what is the stock price currently and the stock price forecast. All right. So right now is at $96.07. And we go here. I always like to look at what the Wall Street price forecasts are because let's be real, they actually dictated a lot more than what people realize. And I like to buy under the average price target. And the consensus is the average price target will be $117.25 over the next 12 months, which is significantly higher according to this information, or as an upside of 22%, which is pretty good. Um, Another thing I took a look at is how long have they paid dividends. So currently they've paid dividends for at least 54 years uninterrupted. So since 1972. So that is very important, especially when you're talking about economic downturns. You want to know that you can, invest your money in assets, and especially companies that have shown that no matter what is going on in the economy, they can generate that cash flow to pay back their shareholders. So that's definitely a plus. Then it talks about the last 24 to 29 years is consecutively increased their dividend, which is something else that you want to keep an eye on. Even if they only increase it by 2 cents or 5 cents, an increase is an increase, so you able to acquire an asset that's consistently paying you money regardless of the economy without interruption. And when they have better years where the economy is flowing better and more cash flow is coming in, they can increase it a little higher. You know what I mean? And in the years that is not so great, they still increasing it. So it's a win-win in my book. It's also a dividend aristocrat. I'm very big on making sure that I put kings and aristocrats and stocks that's trending in that direction into my portfolio for, you know, my personal opinion, a peace of mind, because they have shown a history of being able to consistently pay their shareholders and showing that that is a priority to them, which is for income investors, that is a big, huge consideration when you're talking about adding these positions to your portfolio. All right. And then, the last thing I looked at is the dividend safe? Yes, the dividend appears to be safe. Um, and then they talk about why the dividend is considered safe. Healthy free cash flow. It talks about how much it generated last year, and that's something that you want to pay attention to because that free cash flow is what they're going to use to pay their dividend. And they did also talk about some risk to monitor, commodity volatility, and slow growth rates. I'm not really worried about slow growth rates as far as the dividend. I mean, I'm okay with a solid dividend. If the average cost price is 117, um, and I believe that, let's see, what is the dividend? I believe it is a dollar 10, if I'm not mistaken. But if that is the case, yep, a quarterly, a dollar 10, and that breaks out to 440. So at the current price of 96, $97, a dollar 10 is more than 10 cents for every $10 that I'm going to pay for that stock. And, that's my breakdown. So it's definitely something that at that price that I would actually definitely get on to. But this is something that I may definitely look to add to my portfolio, especially if it stays in this price range for the next couple months after I, get more shares of Enbridge and Eversource, the utility company. If you haven't seen my breakdown of that company and those companies and why I add them to my full portfolio, look at some of my past shorts. But let me know what you think about JM Smuckers. Do you use the products? Would you consider adding this to your portfolio for dividend income? Leave those in the comments and let me know if you have any questions, and I'll definitely answer them.